Hi, this is Joseph. In this video, I'm going to review a trade that I placed on Friday, which was Friday, October 4th, 2013. And the reason that I want to take some time and make this video and review that particular trade is that I got a few emails and some of my students in the chat room, my members, were asking, could you review exactly what you did and how it was that you determined that particular trade, because what they saw me do was incorporate the larger time frames and some overall larger projections, price targets, and then I sort of drew all of that technical information into one potential trade setup, along with identifying the fact that on Friday there really wasn't a whole lot of economic data available at that time. So I was watching interest rate chart and I was watching the US dollar and also the dollar yen, which is where I found this particular trade. Now, prior to Friday, I was pretty bearish the dollar yen for quite some time. And if the dollar yen is a particular favorite of yours to trade, you're probably aware that on some sites where they offer free trading signals, for example, Daily FX, they were pretty bullish for the last couple of weeks. They kept trying to buy all of these different bounces off of support along the way down, and they kept getting stopped out. And when the market opened up last week, there was one particular trader on Daily FX that reported a minus 110 pip loss. He kept trying to buy the bounces, yet it had not reached its extension targets the way I saw it. I was very bearish. They were bullish. I was right, they were wrong. Doesn't mean that I'm always right. It's just that I want to explain in this video exactly what I was using to determine that. So I want to share with you how I set all of that up. So let's go to the daily chart. This is the dollar yen. This is my daily chart. And for quite some time, this is going back maybe 4 or 5 candles. Again, this is a daily chart. If we were to go back to approximately this date and time here, you'll notice that price was more or less walking along the top side of this downward trend line here. Now, obviously, that isn't the only reason that price started to buy or bounce off of these support levels. But again, to me, it was still bearish and it looked like price could make newer lows. And again, when the market opened up last week, it did gap down quite a bit and continued to move lower until about Thursday or Friday, where it found this support level. And that's when I finally decided to start going bullish that pair, which was on Friday. Now, here on the 4-hour chart, I want to draw to your attention, and I'm going to compress the chart so you can see what's going on here. Now, first of all, when I look at a chart and I see a signal at this exact moment, or this live candle, or whatever candle I'm looking at, when I see a signal, I stop for a moment and I ask myself this question: where has all of this come from? Where did price come from? Were there any trade setups before? So what I need to do is sort of step back and take a look at the overall picture, a larger picture. So here I'm looking at the 4-hour chart, and you'll notice that there was an uptrend, and here it broke that trend line. Now, one of the things I share with my subscribers and my traders in the chat room is that when we get a solid bounce off of, let's say, a Fibonacci retracement level, and for example, in this case, the 618 retracement level, the longer it takes for price to reach the extension targets based on the depth of this retracement level, the more likely it is that we're going to continue to see price roll over and retest these levels. And here it tested that 618 level again. Now here, if we go back to the center point of this entire move, from this low down here to this high and then all the way to where price is now, you'll notice that there's a yellow X up here. There's a yellow X and a clean price swing down here to this second yellow X. That is one new A, B, and then I look for the C retracement, and then from that point I determine the depth of this retracement using the Fibonacci tool. So now I'm going to go ahead and open up the charts a little bit bigger, and you can see exactly what I'm talking about here. Here's that A high, the B low, the C 618 retracement. At this point, what I do is then determine the extension targets based on the depth of this retracement. And then I trade in that direction to those extension targets. Now, again, these are not numbers that I sort of pick from thin air. These are Fibonacci extension targets based on the Fibonacci retracement. So now I'm going to take you to the 1-hour chart, and I'm going to show you these extension price targets based on this price swing right here. Now we're looking at the 1-hour time frame, but I'm going to bring you to that price swing here. I'm going to go back in time. Here's that A high, that B low, and that C 618 retracement. There's that C 618 retracement. Again, based on this retracement, I have projected price targets, Fibonacci price targets, and the first one was 97.40, which is what you see down here at this yellow line, and then the second price target was 96.80. So often, support or targets will often occur as ranges or pockets of support or resistance. In this case, if I'm going to expect to trade a particular currency pair back down to these targets, these would be potential areas. Now, there's also a major psychological level running right through here, which is the 97.00 level. So you'll notice that there's more or less a range or a pocket of support running right through here. I'm going to put right here where the 97.00 level is, right in here. This is 97.00 right there, approximately. So you'll notice that there's a range in here. Now let's go back and take a look at how these price swings continued. You'll notice that the downtrend continued. There was lower lows and lower highs all the way through here. I'm going to go ahead and open this chart back up to a normal range, and you can see how this is the reason, this is the main technical reason why I was bearish over the past couple of weeks, the dollar yen, when many people here were sort of bullish and they were trying to buy these support levels, and then it would roll over and stop them out. Well, until it actually reaches these support levels, here is where it finally starts to reach these extension targets based on that 618 retracement level that I just showed you. So now you'll notice that it starts to test not only the first extension target and goes through it, but then it starts to find some support right here at that major psychological level, which is 97.00. And this is last week. This is October 4th, and this is when I became bullish this pair. Now, again, the reason that I determined this or figured that it was okay to start going long this pair is that, again, from a Fibonacci retracement level and then those extension targets, it looked like it was oversold at that point. Now, of course, there's also some technical confirmation because we're looking at interest rates. We're also looking at the US dollar to make sure that the US dollar supports a move like this and a bounce off of this support level. So on Friday, again, I called a trade to go long the dollar yen when many people had gotten tired of trying to buy the dips and getting stopped out, and they were still bearish when I had then shifted my thinking. And you'll notice how we got this 40 pip rally on Friday just into the close. But this is the explanation as to why I decided to go ahead and go long on Friday the dollar yen when many people were still considering going short and they expected to see this price swing low from earlier in the week taken out, when in fact it really didn't happen. So I hope this information helps you when you're trying to sort of combine all time frames together to formulate one trading decision. And again, I executed the trade on the 30-minute and the 1-hour time frame, even though I was looking at information on the 4-hour and the daily charts. But I hope this also gives you an idea of what I'm doing with the trade copier, because the trade copier, it's actually me placing trades in my own live account. I analyze all of my trades just the way you saw me do with this particular trade. So I'm very calculating, I'm very careful, I'm a very cautious trader, and I only take trades that I know without a doubt are most likely going to work in my favor, which ultimately means you're going to get the same results, because the trade copier duplicates all of the trading activity that I place in my MT4 account, and then it automatically places those trades into your MT4 account. And the trade copier will execute trade orders even when you're sleeping. And we also offer technical support. So if you run into any challenges or any difficulties with it, we help you work out those problems. And I guarantee you're going to love this trade copier program. Thanks for watching, and I look forward to trading for you.